Essentra PLC manufactures and distributes small component parts. In its interims, it told the markets that the trend of positive momentum continued into the first half, with like-for-like revenue growing 7.5% overall at the interims. And it's looking good going into the second half as well. Those numbers were out a few weeks ago. Paul Forman is the chief executive. He joins us now online. Paul, welcome. In addition to this, I noticed actually you saw a 35% uplift in the first half operating profit. Explain what's behind the numbers and where you are in H2.
Well, good morning, and thank you for inviting me back, Jeremy. It's only been 10 weeks ago, but it's a lot has happened. Yeah, we've been extremely pleased with progress. I think it's a mixture of two main things, Jeremy. The first is simply getting more volume through our factories and having the benefit of the operational gearing. But the second is we've been undertaking a lot of self-help actions, both in terms of making sure we have an appropriate cost base, but also critically on the back of, I think, excellent customer service and relations, being able to increase prices sensibly and selectively, but to help mitigate the cost pressures that we've seen. So I think it's a combination of better volume and then self-help.
Just remind ourselves as to what the company does in terms of its individual units, if you like, because you do have separate parts of the business, don't you?
Yes, we do. We do. So, Jeremy, excuse me, there are three global divisions. The first is components, and that makes anything from spacer bars to screws to caps to plugs, the really nitty-gritty, small but essential components that feeds into larger things, whether that be an IT cabinet, a train, a sit-on mower. So that's number one. The second is our medical packaging division, where we make what we call secondary packaging. So that's the cartons, the labels, the literature that will go on an AstraZeneca COVID injection through to a box of Advil or whatever. And the third is our cigarette filters division, which is the world's largest supplier of special filters, ranging from filters that will have capsules in to very recently and excitingly ones that are much more biodegradable than the current. So three quite different businesses, but really all about, as the name implies, essential componentry.
You've undertaken a fundraising. How is this money going to be distributed amongst the diversified businesses that you have under your umbrella of Essentra PLC?
We continue to invest significantly in capital expenditure, whether that be upgrading our IT systems or supporting the very significant growth levels. So all three divisions will see the benefit of that. If you look at our components and our packaging division, where we've done a number of acquisitions over the last 3 years, Jeremy, I think we will continue to do that. We're having ongoing discussions across the world about supplementing our portfolio at the moment. And indeed, you'll have seen that we completed a deal less than 2 months ago in China. But also with our filters division, which is growing very significantly, there's capital investment, whether that goes to the China joint venture or we continue to win a number of outsourcing contracts. So a lot of it is either upgrading our IT or supporting growth or doing acquisitions.
Yeah, let's pick up on that point about the acquisition in China. What's that adding to the business? How do you see it developing in terms of bringing extra business and extra opportunity into the company?
The China market as an industrial base is both the largest and the fastest growing. It is very difficult in a number of our areas to really supply the China market from outside China. So it gives us a market leading position in the Chinese, what we call access hardware market. So that is things like handles and knobs and latches, etc. What it also does is enable us to really put many, many more of our tens of thousands of products through that channel. So it gives us a really good infrastructure and critical mass into the Chinese market more broadly. And thirdly, they have some products that are unique to themselves. So it supplements our global product offering. So it's a really exciting opportunity.
Of course, China, like a lot of countries around the world, are finding it difficult at the moment to fend off the ever-advancing COVID-19. This time it's Delta variant, of course, and we don't know where all this is going. I notice, actually, you do say that COVID-related uncertainty remains, but the business has proven to be resilient, supported by those diversified offerings that you're talking about. What sort of headwinds are you facing? As a chief executive, it's difficult, I know, to plan sometimes when looking at how you allocate staff to certain areas, depending on what's happening with the likes of the pandemic. How are you approaching this?
I would say we see the headwinds in three. Firstly, the well-being of our employees, and we continue to provide all the physical, but also the emotional support. We're 18 months into this, and it's not surprising a lot of people feel a bit jaded. The second area is to continue our support for our customers, because they really do rely on us, and I'm really pleased to say that we're continuing to maintain our levels of quality and service. And the third, and we are by no means unique, you know that better than me, are some of the what I call the supply side constraints, whether that be labor availability, access to freight capabilities in Asia or whatever. There's a whole range of different factors, and it'll vary by business and by region, but that's a big challenge for us at the moment.
In fact, when you open the Essentra website, I was looking at this last night, there's a note that says, due to the current UK port and border delays, we're experiencing an impact to some of our delivery times. Now, this to me sounds a little bit like more Brexit than COVID, but I guess COVID's in there as well, because we know that supply chains are being disrupted because of COVID. How much of a disruption are you seeing cross-border because of Brexit?
I think to be totally candid, we've kind of learned to live with the Brexit impact. So what you saw was an extension of lead times, etc. At the start of COVID. That's pretty much stabilized. I mean, to a degree, it's slightly difficult to disaggregate fully. And so there is some impact, for instance, on freight through HGV driver availability, etc. So I would say that a lot of it now, 70 to 80% of the impact is more COVID.
Are you having to increase wages because the difficulty in bringing these HGV drivers into the business? So it's very difficult, isn't it? Because you're under a lot of price pressures, competition, and so forth. But at the same time, you've got to make business work. You've got shareholders to think of. So how do you balance all that? Are you seeing an upward move in wages?
Yes, it's actually much more pronounced, Jeremy, in the US, where we're seeing our factory and labour workers and warehouse workers. We've essentially put our base wages up for starting employees by about 15 to 20% in the last 2 months, 3 months, something like that. So it's very material. In terms of freight, we don't see the direct impact of HGV. We get it through the increased cost of a delivery, etc. So it's an indirect impact, but it's a very material one. Conversely, if you look at, say, our filters division, which is very much more Asian weighted, there we see freight container availability being the biggest single logistical challenge. So it varies from region to region.
So how's the H2 going to be impacted by rising costs? You've got raw material costs as well to think of. Are they going up?
Again, it varies. Say the base products for filters division won't be, but then the polymers that we have to buy for components, yes. One of the things we're doing to mitigate that overall is to use much more recycled content. We've invested a lot of money in enabling us to be able to do that. And that's really helped, if you like, balance both cost and availability. But overall, we have managed over the course of the year to balance out cost inflation with price rises. For us, the fundamental thing is that what we can't do is compromise that service or quality for our customers. They understand the environment we're working in, but what they want above anything else is high on time in full deliveries and no diminution of quality. In our experience, given the strength of relationships, if you maintain those, then the customers will actually reluctantly live with at least temporary price increases.
How is H2 looking? I think we're a month in, aren't we, from the first half report that you gave us? But how is the second half looking at this point on?
Well, we stated at the time of the results that we were comfortable with the year-end expectations that were in the market, and we reiterate that. If we were to put a statement out now, we'd say exactly the same thing. Underlying demand for filters has remained solid. Plus, we've won, since we last spoke, some new outsourcing deals, so that will help. In components, we see industrial production remaining strong across all of the globe. You'll recall we're strong in the Americas, in Europe and China, and we're seeing continued growth in demand through all of those. And in packaging, again, it's geographically nuanced. So what we're seeing for the first time is in the Americas that the healthcare market is showing signs of life again, the non-COVID healthcare market, because we're very much weighted to a level of elective surgeries and prescriptions. And I think probably because the healthcare market there is more flexible, it's actually responded quicker. In Europe, the underlying demand remains pretty flat at the moment, or supply, I should say.
One final question. I want to pick up on a news headline that broke a couple of weeks ago, that you have taken on a new NED, a non-exec director, a board trainee. Now, this is new on me, but I understand this is all part of a drive to bring more of a diversification to boards. Just explain more about what you've done here and how you see it developing.
Yeah, sure. To the best of our knowledge, I think we're the first FTSE 250 to try it.
I believe you are, yeah.
Very much, and our chairman is at the forefront of this, Paul Lester. We believe that we will benefit from an increasingly diverse board in all aspects, but also we want to try and break this kind of glass ceiling for ethnic minorities. So Dupsi Abiola, who is head of innovation for IAG, British Airways parent, has come as a board trainee. She sits in all of the board meetings. She communicates. I act as a mentor for her. She's feel free to contribute in whatever way. And the idea is that we do two things, one of which is we give her exposure, but also provide that aspect on her CV and on her experience base that enables her to take that step up. Plus, we, selfishly, get access to a very bright, talented person with a very different take on life. So I think it's a real win-win.
I'm sure we'll see more of these, but obviously you're, as a board, to be congratulated with engaging with this sort of innovative approach to diversification. Look, Paul, we'll have to leave it there, but thank you so much indeed for joining us. It's a pleasure to catch up with you again. That's Paul Forman. He's the Chief Executive of Essentra PLC. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.